Hey everyone, welcome back to Tax Money Value. If you're thinking about starting your own business or you've just launched one, buckle up, because today we're diving into something that could save you thousands or cost you big time if you ignore it. We're talking about why you absolutely need a tax professional right from the get-go. Trust me, this isn't just boring tax talk, it's a game changer for your bottom line. Let's break it down with some real-world examples that'll make you go, "Whoa, I didn't know that." Okay, picture this. You've got your brilliant business idea. Maybe you're launching a freelance graphic design gig, or opening a cozy coffee shop, or even starting an online store selling handmade candles. Step 1, you apply for an Employer Identification Number, or EIN, from the IRS. It's like your business's social security number. But here's the sneaky part. When you do that, the IRS slaps on a default tax classification for your business. For a single-owner LLC, it's usually treated as a disregarded entity, meaning your business taxes flow straight to your personal return like a sole proprietorship. Got multiple owners? It defaults to a partnership. Sounds simple, right? But hold up. That default might be like wearing shoes that are 2 sizes too small. It works, but it's not comfortable, and it could trip you up down the road. Let me hit you with an example. Say you're Sarah, a solo entrepreneur running a consulting firm from home. No employees, just you and some contractors for occasional help. The default sole prop setup means you pay self-employment taxes on all your profits. That's Social Security and Medicare, folks, at about 15.3%. Ouch! But what if your business grows and you start hiring a small team? Or you're planning to expand into real estate investments? A different classification, like electing to be taxed as an S corporation, could slash those taxes. But wait, not so fast. There's a ton of hype online screaming, "Go S Corp to save on payroll taxes." And yeah, it can be true. In an S Corp, you pay yourself a reasonable salary subject to payroll taxes, and the rest comes as distributions. No self-employment tax on those. For example, if your business nets $100,000, you might salary yourself $50,000 payroll taxes on that and take $50,000 as a distribution tax-free for SE purposes. Boom! Potential savings of over $7,000 in self-employment taxes compared to a sole prop. But here's where it gets juicy and why you need a pro. S-Corp aren't always the golden ticket. Enter the Qualified Business Income Deduction, or QBID. This bad boy lets you deduct up to 20% of your qualified business income right off your taxes. In a sole proprietorship or partnership, you might get the full QBI'd on your entire profit. But in an S Corp, that reasonable salary you paid yourself, it reduces the income eligible for QBI'd. So in our 100K example, if you're a sole prop, QBID could shave $20,000 off your taxable income. As an S-Corp, it's only on the 50K distribution, which means just $10,000 deduction. Depending on your tax bracket, that could mean paying more overall. And it's not just about S-Corp versus others. Are you in real estate where partnerships shine? Do you use a lot of contractors, triggering 1099 rules, future plans for selling the business? All these play into whether you should elect C-Corp, stay default, or go pass-through. Not having the right classification from the get-go means backtracking, filing elections and paying extra fees, which are all avoidable with a tax pro from day one. The key? Tax projections. A good tax professional runs the numbers for your specific situation. They'll model out scenarios. If we go S-Corp, you save X on taxes but lose Y on QBID. With employees, here's how benefits deductions change. It's like having a crystal ball for your finances. Bottom line, don't wing it with that default classification. Get a tax professional early before you file that first return. They might cost a bit up front, but the savings, massive. I've seen clients dodge audits, maximize deductions, and sleep better at night. If this fired you up, hit that like button, subscribe for more tax tips, and drop in the comments. What's your business dream? Have you dealt with tax surprises? Let's chat.